Welcome to this module 2. There are 5 financial elements in the accounting, and these 5 magical words are basic of language of business. They are assets, liabilities, equity, income and expenses. In this video, we will see brief intro of the first 3 financial elements that are asset, liability and equity. The next two financial elements we are going to discuss in the module 4 of income statement. So let's begin. The first thing, that is asset. It means anything which are owned by business and will generate revenue for them. That's why they are called resources. Now, how do we differentiate between these two things? It's asset or not. Let's say your company has two cars in the business. One car you are using for picking some employees from their home to your company, and the other car is just in your garage for last 2 years because actually it is not in the good working condition. So out of those two cars, which is your asset? Look at the definition, which says that anything which is going to generate the future benefit can be identified as an asset. So, of course, the first car with which you are bringing employees to your company and they are working for you, in fact, they are generating money for you indirectly, are an asset. But the second car, which is in the garage, it is of no use to you, cannot be identified as an asset. Let's see the second thing, liabilities. It means all obligations which you have to pay to some third party. It can be loan, it can be any other kind of borrowings or credit purchases. The third thing is equity. Whatever is remaining after deducting liabilities from asset is actually called equity. It's also called owner's claim on the assets. It includes owner's capital, which they are investing in the business, plus the investor's capital. Well, we will study this more detail in module 5. Now let's look at the accounting equation, which is asset is equal to liability plus owner's equity. The accounting equation, it means that every transaction in the business has two impacts in accounting. For example, if you purchase the goods, you are purchasing good which is an asset for your company. It will be coming in the business, but at the same time the cash is going out of the business. Let's see what is accounting equation in more detail. It's a base of all accounting. Asset should be always equal to liability and owner's equity. That means that if asset is increasing, it should increase the liability also on the other side, or the owner's equity. Or if the asset is not increasing, liability decrease. At the same time, owner's equity should decrease. The essence of this explanation is that every transaction will have two effects, and those two effects should always equalize this accounting equation. Let's see exactly what I am talking about. Now, let's do some discussion and try to solve this. What is double entry bookkeeping system? Well, the accounting is based on very important concept, which is double entry system. In this, every entry to an accounting requires a corresponding and an opposite entry to a different account. The double entry has two sides, which are known as debit and credit. We will see what are debit and credit and their rules. We will also see how we generalize these transactions. Debit means left side of the account and the credit means right side of the account. The transactions are recorded on T account, what we also say as ledger. So on the left side it's debit and on the right side it's credit. I will show what I am saying. But remember, you should know which side to write which transaction, and this can be done only when you know the rules of accounts. This credit chart is very easy to remember. Let's see how. If you see in the chart, the assets if increasing are debited and when they are decreasing are credited. Similarly, expenses when increasing are debited and when they are decreasing are credited. That means out of all these five elements, the asset and the expenses are of same nature in the terms of debit and credit. And liabilities, owner's equity and revenue are of same nature, as they are all credited when increased and when decreased are debited. So depending on these, we record in journal entries on the basis of double entry system.